Hi, I'm Brian Milner, and I'm with my colleague Ian McGugan today to discuss what the Fed should be up to when it next gets together. And Ian, you don't think they should be raising rates?
That's right. I think you should take a nice long holiday break and do absolutely nothing. There's no reason to. There's no inflation out there. The economy is plodding along. What are they trying to protect us from with the rate hike?
Well, the fact is that the economy is doing much better. The conditions are ripe for this.
Better by what standard?
Well, the markets also have priced this in. So you're basically saying, well, you know what? We'll tell the markets that we're more worried than we actually are by not raising rates, and all that will do is prompt a lot of unnecessary nervousness.
We're supposed to worry about traders. I think we should worry about ordinary people who are not seeing much in the way of wage gains over the past few years. Why should you try to put your heel on the top of a very weak economic rebound that might actually lift wages?
But how weak is that rebound really? We are seeing terrific job growth. We saw great job numbers again. We're seeing a growth in the general economy, a rise in full-time employment, and yes, wage gains are slow, but they are rebounding. And the fact is that if the Fed stays at zero forever, it really hurts savers, it hurts the economy because people don't have an ability to get any interest on their savings.
Brian, once again, let me correct you. The Atlanta Fed says that the GDP right now is growing, their GDP Now tracker. It's growing at a mere 1.5% a year. Why would you try to do something that would discourage more robust growth?
Well, you're implying that the Fed can actually affect where the economy is going by keeping rates the same. And I'm saying that even if they raised it a quarter of a point or even a half a point, it wouldn't make a difference anyway. The fact is,
so if it doesn't make a difference,
monetary policymakers cannot prompt economic growth. They can just prevent an economic decline. But at some point, you have to have a rebalancing of the curve. You have to be able to assure the markets that you're actually ahead and not behind the curve.
I don't see it at all. I don't even see the logic inside the Fed in terms of what this would do to help anybody, because among other things, it's going to lead to an even stronger U.S. dollar, which will have a depressing effect on U.S. exports.
Well, I in fact don't think it'll have much effect on the currency at all. I think the dollar is as strong as it's going to get regardless of whether the Fed moves or not.
Well, I don't follow your logic because you're saying that this doesn't matter. So if it doesn't matter, why do it?
I'm not saying it doesn't matter. I'm saying that the message matters. And I think that they've sent this message for long enough, and they have to do it. And I think we have to agree to disagree once again.
Well, I think the message from the Fed should be, have a happy holiday, everybody. We're not going to raise rates.